Consumer Reports starting to change its tune on Tesla. Phil LeBeau's got the story. Phil.
Melissa, I think this is an interesting story because this report from Consumer Reports, it's based on survey answers from people who say, here's what works in my car, here's what doesn't. About 400,000 people fill out this survey. After calculating what works and what doesn't, Consumer Reports ranks Tesla 23rd out of 30 brands. But more importantly, they now recommend the Model 3 and the Model S. That's a designation that they took away last year when they dinged Tesla for questions about the build reliability. And this runs counter to a narrative that's been swirling around the company over the last year and a half. And that has to do with the quality of the craftsmanship of the vehicles that are being built out at the plant in Fremont, California. We saw these pictures of the tent out in the parking lot, the permanent tent, and people said, that's no way to build a car. That's the reason the quality slipped last year. Well, according to Consumer Reports, it is improving, and the owners of these vehicles say that it's improving. As you take a look at shares of Tesla, which, by the way, have just been on a tear over the last 6 months, remember that they unveil the Cybertruck. That's their electric pickup truck. That will be happening next week in Southern California.
Now, Phil, they yanked the recommendation. Wasn't it just in February?
I thought it was last year, but I'll have to go back and check. I thought it was in the last Consumer Reports annual automobile survey, which they do this every year, and it usually comes about this time of year. And it was based on what the owners of the Model 3 were saying, which was saying, you know what, the build quality's not that great. They've changed their tune this year.
All right, Phil, thank you. Phil LeBeau in Chicago for us. So on Twitter, I get a lot of questions about Tesla, and I get a lot of questions specifically for you. I don't know why they don't just tweet you.
They do. They tweet me. They don't like me.
Okay, so walk us through. You're short Tesla. What do you do when a stock is up this much in such a short amount of time? You're a long-term believer in the bear case, but in the meantime, it's a painful short.
Well, these are great questions because, first of all, with a stock that's this volatile, I would never put a hard stop on it. People say, hey, where's your stop? I mean, you don't put a hard stop on a stock that moves 20% of the clips. I'm short somewhere around 310, 315. To me, what I think has happened since that the last number that we saw with a huge cash balance, with the profitability, the stuff we've never seen before in the company, I don't suddenly say all those things that I'm worried about with their balance sheet go away. I mean, they
lessen because the ability to raise cash is greater now,
Of course they do, but a squeeze in the stock that may be coming about them actually overcoming balance sheet concerns, which I don't think they have, because again, I look at the net interest income of last quarter, and it doesn't tell you they had that much cash in the balance sheet the whole quarter. It tells me they pulled a lot of levers to get a lot of cash in the balance sheet the last quarter. But the reasons why you'd be really concerned about this stock is if you actually think the company's executing so well that actually the valuation, which makes no sense anyway, even if they were executing and did have a balance sheet, is going to go to another level. First of all, is it a car company? Is it a tech company? Is it a data company?
Yes.
I mean, this is what I struggle with all the time. So the valuation makes no sense.
But you're still short.
I'm still short, and I'm not drowning. I'm not drowning in a short. I mean, first of all, this is a short that's well sized. A lot of this has been played through the option market. But to say that you put a hard stop on it, and being in the whole 15% on a Tesla short is not something you lose sleep over. It's just not.
The problem is if it were a risky short, you have unlimited risk to the upside. The stock is up 60% since October. It is overbought, but it hasn't unwound the overbought yet. So either the stock has to come in or it's going to unwind the overbought, and still you have a 22% short interest. So this could go higher than up 60% in a month.
So go higher or unwind?
It is an overbought, right? We know that June 3rd low, 175. Here it is, 300. Even if it's going higher, the path higher, more likely than not, passes through a lower price. Give back, check back, sell off, dip, whatever word you like. That's what's due.
Quickly.
Implied volatility is always important. This is high volatility. This is high volatility on a stock that's gone higher. So you got to be very careful when you're playing the options.